I'm your host, Greg Villafana, and we've partnered up with our friends at MPP to deliver short business tips each month. Having expertise in the swimming pool industry and business world, we believe these messages will truly help your business. So without further ado, let's jump into this month's business tip.
Welcome to your go-to podcast for the pool and spa industry. My name is Tyler Rasmussen.
And my name is Greg Villafana. And this is the Pool Chasers Podcast.
All right. Well, thank you so much, Hal, for being on the show once again. I think this is, like 5-10 episodes for you.
Trying to see how many we can crank out.
Yeah, it's always a pleasure having you on the podcast. And today we have a really good topic that a lot of business owners are thinking about, talking about. We're not always 100% honest when it comes to this topic, but today we're going to talk about profit versus what you make. And I guess what you make would be the business owner, correct?
Absolutely. And what made me think about this is I've seen this topic on a lot of the pool industry Facebook groups lately. It's come up on several of them. So, I mean, clearly people are talking about this and observing the groups. I was seeing some information that, probably is not totally true and accurate, that hopefully people aren't running their business based on some opinions I've seen online, because, this is a fairly definitive universal business practice. What is in small business, right? Like, what is profit versus what is an owner's salary? I've done lots of sort of mentorship as the mentee and the mentor in business outside of the pool industry, very specific to this topic, and attended seminars on it. And so I think it's a really good thing to just talk about within the industry, because with so much of our industry being owner operator, and in many cases, a single owner operator in a one person business, I think this is a really important topic to talk about, so people have clarity on what is the right way, how should they be looking at their business to grow it and build on it if that's what they want to do, and to just objectively and honestly look in the mirror as a business owner of, am I running a profitable business or not? Right.
So let's pedal back a little bit. Are profit and the owner salary the same thing or no?
Definitely not. Now, the owner may receive the benefit of both of those, but they are very different things. The owner's salary ideally should be something that the owner specifies for themselves as a W-2 salary that's realistic. There are accountants out there, and clearly I am not an accountant, that might advocate for paying yourself a falsely low salary from a tax perspective, because there absolutely can be tax advantages to that. I think the decision is, do those potential benefits outweigh looking at your business in a realistic way that general business practices would dictate, but also what would an outsider think? Not just if you chose to sell your business, but if you died tomorrow and somebody was looking at it to, pay your family for the business. And so there are multiple layers to this, right? Outside of just running a smart business, it's protecting those you care about and love, and what could happen someday if you're not around, because the way the world looks at your business is the way the world looks at your business. Your view or perspective on it doesn't mean so much. Hard objective numbers do.
Right. And I'm sure most people listening aren't accountants either, but would you say that when you get an accountant, one of the most important things is just having that discipline that has been given to you? That is usually your role. If you're looking at, profit and loss, and you're taking on new employees and you have all this overhead, your job is to, there's got to be rules and boundaries, and it's, what kind of bad habits can you break? Because we all have them, mm-hmm. And once you figure out what those are, is that kind of what you're saying?
For sure. Well, and so much of it too is just the lens at which you're going to look at the problem, right? If you're trying to maximize tax savings, which is what a good accountant should be doing for you, the way they're going to look at your numbers is different than if you're looking to analyze your business to see if it's truly profitable and truly healthy. Those are two different questions. How little can I get away with paying taxes versus, is my business healthy and profitable?
Right. So you said that you've been seeing some different conversations on social media about this topic. What are some of the misconceptions that you've been seeing around this?
I think the biggest one is just that they are the same thing. That if I'm me in a truck and I'm out cleaning pools and I can clear 60 grand of total quote profit in this context, that is both my salary and the profit of the business, that I have a business that made $60,000. Now, if you're not paying yourself as an owner a W-2 salary, your business did not make $60,000, because what would it have cost to replace you in that business, right? So if it's me in a truck and I'm out cleaning 50 pools a week and doing some repair work and doing some office work, there's cost involved with that work. It's, your labor is not free. And so to get a true pulse on your business, you need to account for that. What would it cost to pay somebody to clean those pools in your place? What would it cost somebody to do that repair work and to do that administrative work? And so that's the key piece that's really important, because if you think you took home $60,000 because your accountant said you cleared $60,000 in profit, but you didn't pay yourself a penny, you did not in reality take home $60,000 in profit, unless you have a business that can run with zero labor.
Sure. And why do you think that people get these confused? I mean, that sounds like a pretty common scenario. We went through it as well. There wasn't really a handbook in the beginning telling us how to do this correctly. But as time goes on and you speak to a lot of people like yourself that have gone through it, I think it's really difficult for people to just accept that they might not be running their businesses correctly. But, like the book, Profit First that you had recommended, you learn quickly that you really got to start doing things the right way, because say a recession comes, you're going to be really screwed because, you don't have a handle on that.
Mm-hmm. No, it's a super easy trap to fall into. And that is, as small business owners, typically really the only view we have on our business, especially, the situation of a one polar where you've got so many things going on that it's usually the only time you're taking a really good look at your books is at the end of the year when you're meeting with your accountant and you're looking at what he is saying you made as a business. And so it's just, I think we don't often take the time to go through the practice of looking at our numbers in a true business sense, not just a tax sense. That's totally normal and totally common, and something I think probably every business owner that didn't formally go to business school, and even most of those people probably are guilty as well when they're living the scramble of small business life. That usually people just don't take the time and discipline to look at their business that way. But it is, it's so easy to, in this case, say if I want to pay myself $50,000 a year, if I think, that's the fair salary for me to go clean pools, do the repair work I'm going to do, and do the administrative work. Say if I've got $100,000 business and I'm going to pay myself 50 grand a year, it's very easy to creep into negative profitability before you know it, right? And so I know this can be hard as just an exercise that we talk about without looking at what's a spreadsheet or this on paper. But if you have $100,000 in revenue and you're paying yourself $50,000, say it costs you $30,000 in parts and chemicals to run your business. You decided you wanted to treat yourself with that new truck when you went into business, so you got $1,000 a month truck payment. Those cogs alone, out of a $100,000 business, you're sitting at $8,000 in gross profit. So then, if you've got a storage unit that you're throwing, goods in, that's $500 a month, and you're paying your insurance and your phone bill. Say if those things in total only are maybe $10,000 or $11,000, you're already not a profitable business. You're in the red. And so that labor is not free. So you should be valuing your time and paying yourself accordingly for it. But where that's really important is how easy it is to fall into the negative. And think you have a profitable business because you lived on $50,000 last year, but you actually lost money as a business. And that's a very slow creep. It can sneak up on you. It can take several years before you realize, no, I really am in the negative.
Yeah. And I heard you say the word cog. Can you, maybe explain that to the listeners?
Yeah, just your cost of goods. So whatever it is you were buying, that you are then passing through and selling to the customer. And that's not just the material. That's your time. That's whatever it takes to get you out there. So your vehicle. There's several things that go in there. It is the bare minimum cost that you are going to incur to provide the service you're providing to your customer.
Right. And what are some, I don't know, practical tips that people can take right now to get started? Maybe they're not going to reach out to an accountant right this second, might be scared,
Yeah.
but maybe they need to, get a spreadsheet opened up and really start, figuring out, what their cost to do business is. What are some good sort of fundamental tips that people can take right away?
Yeah, so there are a couple books I'd recommend, right? One of which you already mentioned, Profit First. The other one is Simple Numbers by Greg Crabtree, and they're very short, easy reads. You could probably knock them out in a long afternoon on a weekend, and they're completely about this topic. So the Profit First model, basically what it is it's encouraging you to make sure that you determine how much profit you want out of the business, and then to build your business around achieving that level of profitability. So you're essentially, as the title says, accounting for your profit first. So say if you charge $40 to clean a pool and you decide that, you want, assume half of that is going to the cost to provide the service, right? You're paying yourself and you're paying for the things you're putting in the pool. Out of that remainder, you're going to determine, okay, how much of this should be profit, and you're putting a percent on it and just earmarking that money as profit, determining how much is your owner's pay, how much should go to taxes, and then everything left is your budget to go spend to run the business. So basically it reverses it. Instead of saying, let me run the business and see how much is left, it decides, here's how much I want to make out of the business. And you see how much is left and realize, okay, that's all I have to spend to run the business. So it sort of turns it on its head, which is just a really good exercise to go through to check yourself as far as what you're spending. And, I think another really good practice is just determining, one, what you think you need to make to justify being in business for yourself. And if you decide that's what you're going to pay yourself as your owner's pay, you need to live on that amount of money. Don't count on the profit. That is a very important discipline to build not just your business, but to build your personal wealth, which is what most of us get into business to do, right? And so what I mean by that, at the end of the year, if you are tracking your books well and you have a profit and you're sitting on, say, $20,000 in profit, your accountant might say, go spend that money, because if you don't, you're going to pay taxes on it. And that's a super valid point. And if you're way down the road and have a very mature business and you don't have any eyes on growth, cool. That could be the way to do it. But if you still want to grow your business, sure, you might pay taxes on that, but if you spend it, you don't have it anymore. And if you can hold on to that profit, and put it towards buying assets and real estate and things that not only will help your business, but your personal wealth creation, you can probably make far more money as a return on that investment of what you could do with it than what you would have saved in taxes that year. And like a good example is, I know many of us owner operators like to buy the real estate we run our businesses in, right? And so if you're just completely emptying the till and spending all that money at the end of the year to save on some taxes, as opposed to maybe you eat $20,000 in taxes this year to put $30,000 into savings as a down payment on real estate, and then you go buy your office, and that $20,000 you could have saved in taxes becomes a 4x multiple on the 30 grand you spent on a down payment, because that real estate appreciates. You're coming out far better, and you're sitting on an asset, right? So it's all about using that profit intelligently, but you can't get to the profit if you haven't determined that you're actually paying yourself, running your business in a way that you have real profit, and don't just assume all of the money that comes in is money to be spent and your owner's salary.
Right, because you're kind of going backwards, if you're spending the profits and you're trying to grow, you're trying to, buy more fleet vehicles and recruit more team members. And if you're spending profit, and maybe you're using a loan to get that new truck or whatever it may be, the interest is probably going to be more in the long run than the taxes you would have paid in saving it.
Well, and the even trickier part is if you don't know what you're paying yourself, you actually don't know that you have any profit to spend. Just because you have cash coming in the door at your billing cycle doesn't mean you're actually profitable. There's still outstanding bills at distribution and paying yourself properly if you haven't, and other unforeseen things that could come up. So there's also a difference in cash coming in the door and profit. And so that's one thing too, that if you don't have a good grasp on what these numbers mean, you may be spending money that you don't even have and you don't realize it.
Right. Is there any good advice for people on trying to figure out what they should be paying themselves? I know that's a tricky one.
It is a tricky one, but it's also, I think a good basis is, all of us, not all of us, most of us who run businesses in this industry have been employees in the industry, right? And so using even just that baseline amount of information of what was I being paid as an employee of this other business, or what have I heard other people are being paid, there's your good baseline right there, right? So take that and then see if you can build a profitable pricing model around it. If you can't, okay, you're done before you started. But that is your baseline. And then you can adjust from there as the business scales. If maybe you can start taking home more, or realize in tough times, or if your pricing is not good, that you need to take home less. It's very easy to go start your own business thinking you're going to make more money, but if your pricing's not good, realizing you're making a lot less money than if you were working for somebody else. And really the baseline is building it around what that owner's salary should be.
Yeah, I like that. So maybe you are a one poler and you started off paying yourself kind of like maybe what the industry standard is for a technician, or, if you want to go a little above that because you want to pay your team more, if you're living off that, you might be making some additional revenue that could very well be profit. And maybe as you grow into sort of a real sort of management role within your company, you can kind of, review, your pay structure, because it's almost like what you're saying is like an employee within your company. And it's like, what would you pay yourself, or what would you pay somebody else to do that? And it probably might be good sort of inspiration to really want to look at things a little bit more closely, because you're like, dude, this is not enough money. I'm going to call Verizon and see if we can, get these phone. Maybe we can get locked into a better plan. Maybe get our insurance costs down. Maybe we can get we don't need this crazy internet package. There's, a lot of things that, I've heard before, but a lot of things that you can do to, drive that cost down.
For sure. Well, and one thing too, I can just tell you from, the vantage point that I've been fortunate to have of having built a business, sold a business, and looking to buy other businesses as a part of National Pool Partners now. Healthy businesses in this industry, you should be looking for a 10 to 20% profit margin. If you're below 10% profit on top of everything that you've already, spent to run the business, it's not a super healthy business. And I can tell you there are lots of businesses out there that are operating very comfortably in that 10 to 20%, even slightly higher than that profitability. And that is, I would say a generally accepted, again, just in business, like fair and healthy amount of profit to have. Because I know also business owners, especially when it's early, sometimes can like harbor guilt about being profitable. Or we have, people that want to go out and go out on their own. They want to help the customer more in their mind by doing service cheaper than maybe the company they left that they thought was charging, unfairly. But if your business isn't bringing home at least 10% in profit, it's time to re-examine it. Greg Crabtree in Simple Numbers even talks about that is like the basis right now. And this was pre-inflation, right? So now it's even a whole different game. If you aren't making at least 10% profit on your business is already in danger, because very little can all of a sudden take you to negative profitability. And so that's a good baseline too, as you're building out a model, is make your time worth it. You should be making at least 10 to 20% on top of your owner's salary as a company. Now, that doesn't mean, go spend all that money, because we already talked about that. But that should be the cushion you've got in a healthy, comfortable business in most industries, but in this one for sure, that is a solid range.
Right. And, we'll end things with, one last question. And that's really, what are the consequences of not getting a handle on this concept of, profitability and what you should be paying yourself as an owner?
I mean, it's a pretty obvious one. You're going to be out of business. And you might stretch that going out of business process out for many months, or in some cases, if it's, even in like the rough numbers I threw out earlier, it could be several years if you're only losing a couple grand a year. But it will catch up to you. And, that's a lot of time and effort. And running a business also, it's more than just the time and effort. It's the emotions and the people you're working with. There's so many things that go into it that could all be for naught without just putting an eye to the numbers and making sure you're running a business and not just providing a service, because those are two different things.
Yeah. And I'll say that I think if you get into this business, you have to know that you're going to have to be accountable. These are things that you have to do. And I can't tell you how many times for business owners and friends, talk about how their lifestyle is a certain way and they almost don't want to break the news, say to their wife or their kids that they really need to like scale back, their lifestyle, the way that they're doing things. And, if you're not willing to have some of those difficult conversations, there's no harm in working for somebody else, because if you're not willing to do that, that's really not what it is to be a business owner and an entrepreneur. Really, owning your own business is about, tackling all the really difficult stuff. Unfortunately, you don't get to do a lot of the easy tasks. And, that's the most important one in my book anyway.
For sure. Well, and also you got to get to that fun finish line of being able to reward yourself with that profit, right? Really the priorities outside of your owner's salary when it comes to profit is grow your savings. That way you make sure the business is sustainable if and when you hit hard times, because it will hit hard times. After you've grown your savings, fund growth, if that is what you want to pursue, right? Start earmarking that money to grow with. And then after those two boxes are checked, reward yourself and have fun with that profit. Then it's time to take those owner's distributions and go do the things that make you happy outside of work.
Definitely. So you have any last comments before we end this?
No, I don't think so. I think just check out those two books, Profit First and Simple Numbers. And I think you'll find them worthy reads.
Most definitely. Thank you so much, Hal. Really appreciate you.
Cool. Thanks, Greg.
Thank you so much for listening. If you'd like to learn more, you could hit the link in the show notes below or visit poolchasers.com. If you'd like to learn more about MPP, visit go-mpp.com. See you out there, Pool Chasers.